For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. When it comes to the hottest stock in the S&P 500, one company stands above the rest. As a leading provider of artificial intelligence solutions and data analytics software, Palantir has experienced phenomenal growth this year. Its stock price has skyrocketed by more than 320% since the start of the year, making it one of the most talked about companies in the market. This incredible performance has propelled Palantir's market capitalization to an impressive $165 billion. The company's AI-driven products and services have positioned it as a key player in industries ranging from government contracts to private sector enterprise solutions. Palantir's ability to capitalize on the growing demand for artificial intelligence technologies has fueled its meteoric rise. However, as the saying goes, what goes up must come down. With a valuation as lofty as Palantir's, sustaining such rapid growth becomes increasingly challenging. In light of this, let's examine two companies that I predict will not only continue their own growth trajectories, but also surpass Palantir in market value over the next 5 years. The first company on this list is Intuitive Surgical, a pioneer in robotic-assisted surgical systems. Intuitive Surgical's flagship product, the Da Vinci surgical system, has revolutionized the way surgeries are performed by enabling minimally invasive procedures with enhanced precision. This innovation has made Intuitive Surgical a dominant player in the healthcare industry and a key contributor to advancements in surgical technology. Currently, Intuitive Surgical's market capitalization stands at approximately $194 billion, already exceeding Palantir's. Despite this higher valuation, I believe Intuitive Surgical is poised to grow even larger in the future. The company's consistent performance and strategic positioning make it a strong candidate for long-term success. In Q3 of 2024, Intuitive Surgical achieved notable milestones. The installed base of its Da Vinci surgical system increased by 15% compared to the same period last year. This expansion indicates growing adoption of its technology across hospitals and surgical centers worldwide. Additionally, the volume of procedures performed using the Da Vinci system rose by 18% year over year, reflecting heightened demand for robotic-assisted surgeries. The combination of a larger installed base and increased procedure volumes has directly contributed to Intuitive Surgical's robust revenue and earnings growth. The company's financial performance underscores its ability to capture market share in the growing field of robotic surgery. One of the key drivers of Intuitive Surgical's growth is the demographic shift occurring across the globe. Populations in countries such as the United States and many others are aging rapidly. As people grow older, the likelihood of requiring surgical interventions increases. This demographic trend serves as a tailwind for Intuitive Surgical, as its Da Vinci system is well suited to meet the rising demand for surgical procedures. To put things into perspective, approximately 2.2 million procedures were performed using the Da Vinci surgical system in 2023. Furthermore, the company identifies an even larger opportunity, as the total number of soft tissue surgeries conducted globally is roughly 3 times that figure. This represents a significant growth opportunity for Intuitive Surgical, as it continues to expand its reach and develop new applications for its technology. Despite its many strengths, Intuitive Surgical is not without its challenges. One concern frequently cited by investors is the company's valuation. Shares of Intuitive Surgical currently trade at approximately 69 times forward earnings, a figure that might seem high at first glance. However, when compared to Palantir's forward earnings multiple of 161, Intuitive Surgical appears relatively undervalued. This comparative analysis highlights the strong value proposition offered by Intuitive Surgical, particularly for investors seeking exposure to the healthcare technology sector. The second company I believe will surpass Palantir in market value is Pfizer. While this may seem like an unconventional choice, given Pfizer's current market capitalization of $145 billion, significantly lower than Palantir's, there are compelling reasons to support this prediction. Pfizer's stock performance in 2024 has been lackluster, with the company facing a number of challenges. However, I view this as an opportunity rather than a red flag. Pfizer is one of the most undervalued stocks in the healthcare sector. Its shares trade at only 8.6 times forward earnings, which is half the forward earnings multiple of the average healthcare stock in the S&P 500. Additionally, Pfizer's price-to-earnings to growth ratio, based on 5-year earnings growth projections, stands at a remarkably low 0.9 0.18. This metric underscores the company's strong growth potential relative to its current valuation. It's true that Pfizer has faced headwinds, including a sharp decline in revenue from its COVID-19 products as the pandemic has receded. Furthermore, Pfizer is contending with the impending loss of patent exclusivity for several blockbuster drugs, which has raised concerns among investors. Despite these challenges, Pfizer has taken proactive steps to position itself for future growth. The company has strategically utilized its COVID-19 windfall to bolster its product portfolio and research pipeline. Key acquisitions have brought in promising assets such as the migraine treatment Nurtec ODT and cancer therapies Adcetris, Padcev, and Tukysa. These products are expected to serve as important growth drivers in the coming years. In addition to its acquisition strategy, Pfizer's internal research and development efforts have also delivered results. For example, the company's respiratory virus vaccine, Abrysvo, has captured 53% of the market, demonstrating the strength of Pfizer's innovation capabilities. Pfizer also offers one of the most attractive dividends in the healthcare sector, with a forward dividend yield exceeding 6.7%. This dividend not only provides a steady income stream for investors, but also reflects the company's commitment to returning capital to shareholders. Pfizer's management has consistently prioritized maintaining and growing the dividend, making it a key component of the company's value proposition. While Pfizer may not have the same level of excitement or innovation associated with a company like Palantir, I believe it is undervalued and overlooked by the market. As the company executes its growth strategy and exceeds expectations, investors may come to view Pfizer in a more favorable light. By the end of this decade, I am confident that Pfizer has a real chance of surpassing Palantir in market value. In summary, Palantir Technologies has undoubtedly dominated the headlines in 2024 with its extraordinary stock performance. However, companies like Intuitive Surgical and Pfizer offer compelling growth stories that could enable them to surpass Palantir in market value over the next 5 years. Intuitive Surgical's leadership in robotic surgery and Pfizer's strategic repositioning in healthcare make them strong contenders for long-term success. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.